Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the Forex market. So yesterday guys, we talked a lot about the different scenarios, what could follow depending on how much rate will be cut, and explained how it relates to different patterns and levels and actually strategies that actually we could follow. And since our central view is that rate probably will be cut just for 25 basis points, you probably saw the headlines in the mass media where actually it was said that only among big banks only JP Morgan expects the 50% rate cut. But also the headlines tells that this is most uncertain Fed decision in the 10 years, because chances on a 25 or 50 basis points rate cut seems equal. In recent weekly report, I explained why I still think that 25 basis points is more probable. Mostly it relates to the inflation that doesn't decrease, and second, it's just because Fed doesn't need to make any sharp changes. They have liquidity reserves, they could support market in any case, and it's just one month until the President's Day and election day, and actually just you following the common sense, taking some psychological moments, well, its chances stand not very significant that it will be 50% rate cut. So it's just my personal position. I'm not pretending on some absolute opinion, and just share with you my suggestions. On the market performance, still we see that market stopped here and shows no upward continuation, and the major question yesterday was what we will get. Either we will get straightforward upward breakout, or still we will get some pullback here, and maybe we could get this kind of the hand shorts that we said might be really great for us if we will get it. On the top now we have the engulfing, and if you take a look at the hourly chart, you could see here you could recognize a kind of a hand shoulders shape. It's not quite evident. This is a bit deeper action than previous shoulder, supposed shoulder, but still you could recognize it relatively easily. So here you could see that actually it exists, and we could get some kind of the ABCD performance to the downside, maybe to the conference area, or maybe even lower if we will be correct on the 25 basis point rate. I'm not calling you to trade this setup on the bearish side. We do not intend to do this. Our major task is, if we are right concerning rate, so we probably should get good entry opportunity at the end of the week, so on the Thursday and Friday, if this pattern really will be formed. Another indirect support of this idea you could find on the dollar index. So if you take a look at the dollar index chart on the ICE exchange, you will see that recently grabber has been formed. Grabber suggests taking out of this tab. It indirectly suggests that the rate will be decreased just for 25 basis points, otherwise dollar probably should fall. And here you can see the bullish grabber. Yes, of course this grabber also could fail, but we're operating with the patterns that stands in place, and since they're still valid, we're trying to find some clues to what really market expects. Despite the Fed fund futures suggest 50-50 chances, you could see that the patterns that have been formed recently on the market mostly stands in favor of 25 basis points. This is about the rate change. Concerning trading process, well, if you like this adrenaline trading, when the market's just moving from top to bottom in the blink of an eye, so theoretically you could do this. Many traders I know that trading particular data releases, just getting money fast and on the big moves, and this might be a really great chance. But since we're mostly trading on a high time frames, on a daily and weekly basis, we do not need to take this risk, and we prefer to wait when the results will be published and then to make the decision. Besides, our central view, as I said, 25 base points, it makes sense with the grabber on dollar index, with the pattern on the daily chart on the euro currency. Personally, for me, I prefer to wait in the current circumstances, especially if we will see that this hand short starts working. So that in 2 words. But as I said, this is very specific situation where there is no simple answer, just single answer. Here is no rule of thumb how better to do. So a lot of different moments you have to take into consideration to make a decision. Maybe you will decide to take the position, and you will be right at the final point. So it's also easily could happen. That's why I'm just sharing with you with the points that I have. If you agree, you could wait with me. If not, then probably you could try to just training your currency today and make a bet on the possible rate change.